All right, welcome everybody. We're going to get started here. Welcome to Think Realty webinar. This is our first lunch and learn that we've done in quite some time. Very excited about today's guest from BACKFLIP, Dave Gray. Going to teach about finding comps, analyzing fund real estate investments in seconds. A lot of great information. I've known Dave for a lot of years. He's one of the best in the industry, so you guys are in for a treat. Want to make sure that you guys are aware of some things with Think Realty that we have coming up. July 12th and 13th is the Think Realty event, Think Realty Conference in Tampa. I will put some information in the Q&A section for people. Just want to make everybody aware, instead of using the chat, if you have questions, please use the Q&A. Makes it a little bit easier for us to follow along and make sure everybody's questions gets answered in a timely fashion. But check us out at thinkrealty.com for not only event information, Think Realty magazine, our supplier program, learn how you can have, excuse me, more buying power to help fund your investments and help, if you're a fix and flipper, save money on materials. thinkrealty.com is your place to be for all things real estate. So Dave, good to see you, my man. We're going to kick things off here. It was great seeing you in Houston a few weeks ago, meeting your team. Very excited. Every time I see you, man, I learn more and more. So I'm excited to have you for our first lunch and learn that we've done in a long time. So I'm going to stop talking, give it over to you, sir. Appreciate you.
Awesome, my friend. Awesome. With an introduction like that, I can't mess up now, can I? Okay, everybody,
I mean,
listen.
you can, but I hope you don't.
All right. Happy Tuesday, everybody. So let's get started. If you've seen me speak at any of these before, then you know that I like to keep the presentation short. I like to make it as interactive as possible, right? So I'm going to go through the presentation very quickly, and I'm going to leave loads of time at the end for us to have a conversation. So just so that you know what we're going to be talking about, we're going to touch on BACKFLIP, who we are and why we're in this space. We'll talk a little bit about me and why I'm qualified to be standing here and having this conversation with you. We'll talk about the app, why we built it, and what's the purpose behind it. Then we'll go into a live demo, and I'll show you some of the functionalities of the app and all of that stuff. We'll talk about what to expect when you fund a loan with BACKFLIP. And then lastly, we'll kind of touch on, just some of the general highlights of things that you need to look for when you're working with a lender. And then we'll open it up for questions. So with a bit of luck, we'll get through all of this in 20 or 30 minutes or so, and then we'll spend the rest of the time just answering any questions that you guys have. All right. So to start with, BACKFLIP. So BACKFLIP is a 3-year-old tech startup operating in the real estate investment space. Now, you'll note that I said we are operating in the real estate investment space and not the lending space. And the reason for that is because our goal is to be a resource for investors outside of lending, right? Down the road, the platform will be a hub for all things related to the real estate investment transaction. But today, as it stands, we're focused on loans, right? So when we started this, we looked at the industry, and what we quickly found is that pretty much every lender in this space is selling transactions and not service, right? If you ask most lenders in the space right now, what's their value prop? They're quick to tell you what their rates are, what their terms are. They'll tell you how cheap they are and all of that stuff. But very few of them can tell you what their value is outside of the actual transaction, right? Now, in our perspective, well, I shouldn't say in our perspective, the reality is that in this business, service is paramount to success, right? Your success is dependent on really one thing, right? When you clear all the noise and all of that stuff, your success is really predicated on your ability to close on time, as well as your ability to pay your contracts on time, right? So overall, your success is going to be dependent on how quickly you can get in and out of deals, right? So when it all comes down to it, we could say that the most important thing in this business is time, right? Our approach is to be true lending partners to our members. So the question now becomes, how do we solve the problem of time, right? So the way that we achieve this really shouldn't come as a surprise to anybody. We decided to leverage technology. It blows my mind that there's so many people in this space and it is still such an antiquated space. That being said, though, that created an opportunity for us, right? So what we created was a completely free to use end-to-end platform for investors to find, comp, and analyze and fund their deals in a matter of seconds, right? We didn't stop there. Pre-close, we also give you a full team that's dedicated to getting your transaction to close, right? That in and of itself is not groundbreaking. Most lenders will give you an account manager, processor, and all of that stuff, right? But that's where they stop. Pre-close, that's where we start. Post-close, we do virtual inspections, we sponsor local events, we engage with our members to do networking, training, and all that, right? Ultimately, what this means to you as BACKFLIP members or potential BACKFLIP members is BACKFLIP is the only lender that can boast a 67.5% return borrower ratio. That is higher than anybody else in the industry. And that's something that we're particularly proud of. I do apologize, I'm getting a call in at the same time. So that's something that we're particularly proud of because we have a 67.5% return borrower ratio. Our philosophy is we would rather work with one borrower and help them to do 10 deals than to find 10 borrowers doing one deal a piece, if that makes sense. So let's talk about me a little bit. So I started my career, this says 15 years, it's aging me a little bit, it's actually closer to 20. So I started out doing multifamily acquisitions for a REIT. Eventually that REIT was purchased by BlackRock, and then I moved into commercial real estate investment sales. So I was doing large multifamily 30 million plus deals, right? And those deals were fantastic, right? It's, you know, to say that you're working on a 30 or 40 or $50 million deal was great to say, but what I quickly realized was that I was a glorified order taker because my clients at that level, they've got a complete team behind them. So they really didn't need me to advise them and help them with their investments, right? So as a result of which, I needed to find something that was more gratifying to me. And so I made the transition to residential investments, right? I myself, I'm an investor. I owned 33 properties, 38 doors at this point. I owned a real estate brokerage at one point that I grew from beginning and then sold it. So one could say that I'm pretty well versed in this field. And you know, in having the experience from the real estate side, the lending side, and the investment sides, it puts me in a particular it puts me in a seat that I'm able to see things from all angles, right? So let's talk about the app. Well, the app allows you to find sold comps online. So we're only looking at what's sold. We're not looking at what is online. It allows you to analyze your profit potential on a deal, right? And it allows you to apply for capital seamlessly, right? The app in and of itself is going to cut down, well, a process that would normally take, you know, 5-10 minutes to do. The app will allow you to do it in literally a matter of seconds, right? So what I'm going to do is I'm going to go into the app and just kind of, you know, do a live demo so that you can see what, how it functions. Now, I will say this is my actual cell phone. So anything you see here, just remember that it stays here, okay? Give me 1 second, let me just attach this.
Everything good, Dave?
Yeah, I'm just bringing up my cell phone to do this. Kurt, can you see my cell?
I just see you.
Mm.
Do we want to put your number in the chat?
No. Share screen, give me 1 second.
Sure.
How about now? You see my cell phone now, right?
Yes, sir.
Awesome. All right.
Perfect.
Okay, so let's get into the app. So the app is a very clean interface, right? And when you get into it, the only thing that so mine is a little bit off because I'm blind, so I had to have the screen set larger. So mine is a little bit off kilter. That being said, the app is a clean interface. And if you don't remember anything that I say today, don't worry about it, because once you have the app, you can literally just go back here at any point in time and it will take you through a tutorial for you to use. So for the sake of this conversation, I'm going to use an address that I've used before, right? So what happens is that, so let me back up for a second. One of the features with the app is it allows you to drive for dollars, right? So if you're in the field and you're looking at a property, and let's just say for whatever reason you can't see the address of that property, if you hit this button right here, it will open your camera and you can literally take a picture of that property and it will do the same analysis as if you typed in the address. So for the sake of this conversation, I'm going to type in this address. Let's see, 621. Gardenia, Gardenia. All right, so I'm going to choose this one, 621 Gardenia Street in DeSoto. So you'll see the minute I put in the address, the first thing that it's doing is that it's searching a 1 mile radius and it's pulling up comps, right? Now, where this one is concerned, because I've been playing with it for a little while, it's kind of throwing things off a little bit. But you'll see that the first thing that it comes up with is an as-is value. So what it's showing me is the value of the property as it stands today, right? Obviously, this is running algorithms, and so it's making some assumptions, right? And then it comes up with an after repair value. Now, you can see that this is off because the after repair value is 389, where the as is 478. The reason it's coming up with that number is because, again, like I said, I've been using this property and I've been playing around with it and all of that, right? But what happens is that when you pull this up and you look at it, the first thing that we can do is, and if we look at it and we can say, you know what, this 389 ARV, I want to know how is it coming up with that number? And so what we can do is that we can look at the comps that it found, right? And we can hit on view all comps. And now it's showing me all the comps that it's used to determine that value, right? And what I can do is I can zoom in on the map and I can see, the proximity of those comps. And I can further then just go further down and I can choose, I can add a comp if I choose. So if I think that, the comps that it's using is not, let's say it's not ideal, I can just take one out if I choose to do that. And note each time I take out or add a comp, note what happens to the ARV. It automatically adjusts based on the comps that I'm using, right? So once I've gone through and I'm like, okay, then I'm satisfied with the comps that I've chosen. Also, the other thing is with the comps, we can actually hit on the comp and we can actually see the pictures of the comp. So we can say, you know what? Yes, this looks like it's about, the same finishes that I'm going to use on my property. We can go through and we can look at them and we can say, okay, then we can see, the extent of how the property was finished at the time of sale, right? Once I'm satisfied with the comps that I've chosen, what I can then do is I can then go back out. And then what I'm going to do is I'm going to do an analysis on this property, right? My apologies. That's not it. Go figure now that I have an audience. I'm not, I'm messing up on this. Give me 1 second. Here we go. Okay. So what I can then do is I can just hit I can go through and look at this. And what I can then do is I can go in and do an analysis on it, right? So notice this purchase, it comes up with the purchase price, the after repair value, the closing costs and all of that. And all of these numbers we can change, right? So for example, let's say purchase price. Let's say that we're getting this from a wholesaler. And let's just say that, you know, we know that we're getting it at, let's say $300,000, right? Now, the after repair value based on the comps that we use is saying that it's 401. But let's just say for the sake of conversation that we know that, you know, in that particular market, I know that I can get 525, right? Because ultimately you're going to know more than the algorithm ever will, right? Closing costs is just estimating 2%, but you can change that to whatever number is right for your market, right? And it's coming up with a rehab cost of $58,534. Again, I can say, you know what? I'm not going to spend 58,000. I'm going to be right at 50 or 60 or whatever that number is, right? In terms of debt, well, I'm pretty experienced. So I know that I'm going to get 90% financing. And I know that my interest rate is going to be, let's just say 10% for the sake of conversation, right? So you'll see that the algorithm is run and it's saying that this looks like a good deal, right? Let's just say for the sake of conversation that I was going to do a $100,000 rehab. Well, saying that it's still a good deal. So let's use 150,000. So you see now it's changed and it says, let's dig into this to see if this is a good deal. Because what it's looking at is a potential profit and it's giving you a warning that, hey, listen, this deal might not be ideal for you, right? So let's change this back to 50,000. And it's saying, okay, then this looks like a good deal. What I can then do is I can hit on profit. And it's telling me that based on these inputs, I stand to make $119,000 in profit or a 205% return on my investment. If I'm looking at this and I'm thinking, okay, then what does this look like if I wanted to rent this out instead of selling it? Well, all I'll do is just see that fix and flip button there. I'll just hit that and it will now do a rent comp. Now what it's showing me is if I hit here, it's showing me that I stand to cash flow $260 a month, again, based on these inputs. That is, if I can get $3,000 a month in rent, and if my expenses are $1,675. I think that this is rich for expenses at $1,675. I think my monthly expenses on this is going to be, let's say, $500 a month, right? And where the debt is concerned, well, I know that I'm going to refinance it at 80% at, let's say, 8%, right? So now I can see that my cash flow monthly is $560 a month, and my return is 24.7%. So I can now make the decision as to whether or not this is a deal that I want to fix and flip, or whether it's a deal that I want to hold on to as a rental. Now, once I'm happy with my analysis, what I can then do is I can go back out. And this loan button here, well, before I do that, we can do a couple of things. One is this is the demand here. Let's just say that, you know, I got this deal from a wholesaler and I'm not particularly familiar with Gardenia Street. I can just hit on this demand right here. And it shows me a live street view of the property. I can look around and I can say, okay, then fine. This property looks like it is, you know, in accordance with the neighborhood. So that's great. Happy with the street, happy with this deal. Now I can go out and I can like say, okay, then before I make a decision on this, I just want to send it to my business partner for them to look at. And what I can do is I can hit this and now I can share it with any contact in my phone, right? So I can send it to like a business partner or whoever else to have a look at it, right? Once I'm happy with this, the next step is I just hit that loan button. And now what that will do is when I hit get a loan, it will automatically take all of this analysis and dump it into a loan application for me, and it will send it directly to us at BACKFLIP. Now, obviously, I was doing this and talking through it and all of that, but you can see that by doing the analysis itself, it literally take you 60 seconds to do an analysis and find comps and all of that, right? The app itself, at the bottom, keeps track of all the deals that you've done an analysis on. And the cool thing about that is this. the analysis is done based on the transaction and not based on the property. So what happens is, let's say that you're looking at this deal. This house, for example, is a 5-bedroom, 3.5 bath. Let's just say that, you know, I'm looking at it and I want to see what it would look like if I change it to a, let's say, 6-bedroom and let's say 4-bath. Now, what happens is that the minute I do this and I hit submit, it now starts to run an analysis again based on those parameters, a 6-bedroom, 4.5 bath. And you can see that now that it's looking for comps, for 6-bedroom comps, you can see that it automatically changed the ARV to 525, right? So again, the properties button keeps track of all of the analysis that you've done on all the properties, right? The loans keeps track of all of your loans. The magnifying glass is obviously the search button. This button here allows you to share the app with anybody else that you choose. So it's a pretty simple, all-inclusive app that allows you to do exactly what you need it to do. Let me go back to. Okay. All right. So basically, what the app does is that it puts your power back into your hands, right? It allows you to analyze deals in a matter of seconds and be able to tell whether or not this is something that you're going to delve into further, whether it requires more analysis, or whether it's something that you can just like submit and fund right away. Okay. All right. Let's touch on so let's touch a bit on next steps. So once you've done your analysis and all of that stuff and you've submitted it to us, right? The next step is once that term sheet, once that analysis comes to us, right, or that request comes to us, the first thing that happens is it comes to me and I'll review it. And with a push of a button, I can issue a term sheet. Well, why is that important to you? For those of you who are actively investing, you know just how, I'm sorry, for a second. Right. For those of you who are actively investing, you know just how frustrating it is to submit a loan and then you're waiting a day or two for a term sheet, right? With our system, the minute you submit it, within 2 hours, somebody will review it and just hit that button and send you that term sheet. Once you've signed off on your term sheet, the next step is for us to get the required information that we need. You will have your own hub, your own portal that you can upload all that information into. The information that we need is not much. It is literally your entity docs, and you fill out two forms for us. We are business purpose loans, so we don't care about your taxes, your W-2 or anything to that effect, right? With closing, we can schedule closing within a week of a deal. I like to tell clients that with our first deal, give us 3 weeks just to ensure that if there are any issues or anything, any surprises or anything. But once we have your information in our system, we're able to close in a matter of a week. After that, our rehab draws is all virtual, as well as our servicing, right? So let's talk a little bit about what to look for in a lender. Well, the things that you want to look for are, one, the products, right? Do they have products that fit your investment style or your investment strategy, right? There are any number of lenders out there that are offering, 6-month loan, 3-month loans, and so on and so forth. And in my opinion, it's just kind of overcomplicating something that doesn't need to be complicated. But ultimately, you need to figure out, okay, then, does the product that they're offering, does it fit into your investment strategy or not, right? Technology. Well, people talk about technology a lot, right? Well, the one thing that you need to ask yourself when it comes to technology is, how does it make your life easier, right? For example, with our app, again, it's a simple interface, right? And somebody was asking me the other day if they can calculate appreciation and depreciation schedule. In my mind, that is overcomplicating a process to just decide if the deal is viable or not, right? There are any number of resources out there that is geared towards things that you may not need. If it is important for you to calculate appreciation and depreciation at the time of purchase, then obviously you need to find a resource like that. But for the most part, don't get bogged down with things that are being offered that are of no use to you. Think about it from the perspective of, how does this make my life easier? With us, our application process is online. Our process to monitor deals is online. These are all designed to ensure that you are not having to wait for me to respond at any given time. You can see where your loan is and where you are in the process. And then lastly, the thing that you need to look at is support. You should never at any point in time feel afraid of calling your loan officer or your account manager to discuss anything about a deal that you're looking at. If you have to stop and think whether or not they're going to accept your call, or if you're having trouble getting through to somebody, that should give you a sign that maybe this is not the right lender for you. And with that, that is the end of the presentation. So we'll open it up to questions.
Awesome stuff, Dave. Couple questions that came through, and again, people, if you have questions, please use the Q&A. I mean, don't miss out on some valuable information from Dave here. If you do have questions, please ask them in the Q&A. Where can you download the app is the first question.
There we go. See that QR code right there? Just scan that QR code and you're able to download it.
And take advantage, guys, because part of being on this webinar today with BACKFLIP and Dave is that, when you download the app, they're giving you $500 off your first loan. So anytime you get an offer like that, I would highly encourage you all to take advantage. So definitely scan that QR code, take advantage. Do you pull credit when you apply for a loan?
Kurt, I'm sorry. Let me expound on that as well. So specifically scan this QR code because that offer is for Think Realty members.
Right,
so
right.
If they just go online and just download the app like through the App Store, we
Right.
wouldn't know that
Won't
they're
qualify
coming
for
from
that.
Exactly. Well,
Correct.
not to say that they wouldn't qualify, Kurt, but we wouldn't know, right?
Sure.
So they'd have to pretty much have a conversation with me and all of that.
Makes
By
sense.
using the QR code, it tags them so we know that it's a Think Realty member.
Gotcha. Make sure you scan this. We'll leave this up here for a bit while we answer some more of these questions. Do you pull credit when you apply for a loan?
Not with the application, but once they decide that they're moving forward with the term sheet, then yes, we do pull credit.
Gotcha.
And it lasts for like most 90 days is what it lasts for.
Perfect. And then what is the length of the loan, and is there a prepayment penalty?
Great question. So I mentioned before, and where I was going with this, and I kind of got sidetracked, is you have a lot of lenders that they're trying to differentiate themselves. So you have these 3-month loans, 6 months loans, and so on and so forth, right? Our loans is a standard 12-month. There's no prepayment penalty. So if I give you a loan today and you pay it off tomorrow, you're going to pay 1 day in interest, and that's it, right? In my mind, most transactions, most flips is 6 months, right? But what happens is that if for whatever reason that goes beyond that 6 months, now you're having to pay points again to extend the loan and all of that. So to me, it doesn't really make sense. So what we've done is it's a 12-month loan. When you pay it off, you pay it off. There's no, again, we don't overcomplicate things.
Perfect. This is a good question here. How much experience do you need to qualify for a loan, and is it beginner friendly?
We are very beginner friendly. So I mentioned as part of my earlier that I would rather work with one member and help them get to 10 deals than to find 10 people doing one deal each, right? We are very, we encourage new investors, and I try to take as much time as possible to work with them and all of that. But from new to existing, we run the full gamut.
And I think that's key because, as we've seen with the kind of the hectic nature of, run on banks, there's seemingly a new one every single week. Less confidence in stocks, bonds, mutual funds, those traditional investments that we were all taught when we were younger, that this is how you solidify your future. I see that there's a ton of new people coming into this space. And I look at that as a good thing, because these are people that are saying, I've had enough of the up and down cycles. I want some consistency. If nothing else, I want preservation. The growth is going to be there, but if I can preserve my wealth to allow it to grow, that's critical. So I love the fact that you guys are A, investor friendly, but B, you're also looking to take care of those newer ones to help them on their journey to whatever definition of freedom that this industry gives them.
100%. So, I try not to speak ill of my competitors, right? But I find that most lenders in this space, as I guess as they should be, they're focused on transactions, right?
Right.
And as a result of which, because there's no value outside of the transaction, the only thing they can offer is price. Oh, Dave is at 11%. Oh, I can do it for 10.5%, right? Okay, then 0.5% difference is literally $300. You know what I mean? On most deals, right? So our perspective is, if we can align with you at the beginning of your journey, right, we can be there with you when you grow, right? That's kind of our philosophy, rather than, just getting into the rat race of trying to find everybody that's doing that 10 deals, and now it's just a race to the bottom and they're selling cheap.
Agree. And like you said, then you start squabbling over something as simple as
there you go
$dollars when you're talking about thousands or millions on the exit.
There you go.
$300, that's very short-sighted. So I'm glad that you guys walk them through that process of that journey and make them see that you got to have the big picture in mind, not just this. Because a lot of times that old adage, you get what you pay for, really does kind of come true. And
that is always the case.
And I love that you guys are more relationship based than just the simple transaction. That's going to do well for you long term as well. So I mean, everybody has incentive when they're doing this, and yours is that relationship. You got to know your client, got to know your customer. That's very good for anybody who's new or existing. Take that to heart.
There you go. So, I was talking to a client one day last week, a member. And anyway, they were telling me they came from a competitor, and they were telling me about the draw process that they went through. And we calculated it, and just with their draw process, it held that they were in that loan 6 weeks longer than they needed to be, right? Now, on a $400,000 deal, right? That is literally $8,000 some dollars in interest, right? So somebody would look at that and say, okay, then, they're a 0.5 point less or what have you. I'm going to save $600. Well, if it's keeping you in the deal for 6 weeks longer, now you end up paying almost $8,000 more in interest. So, you know what I mean? It was a futile point.
That's significant. Yes,
exactly.
100%. Do you fund repair costs, closing costs, points, and interest?
So we fund the purchase and anything that is related to the rehab. So we'll fund either 80 or 90% of the purchase and 100% of the rehab. The points, there is an option for us to roll the points into the loan, and you pay it at the end. Yeah, so there's you can fund the points and pay it at the end, but we're always going to want skin in the game.
For sure. Absolutely. I don't think that's too much to ask either.
Yeah.
Is there another way to share the QR code with us? Not working for some reason. Thank you for considering it.
The QR code is not working, as in, well, what I'll do, Kurt, when I'm done, is that I'll send you a link and you can share it to everybody that was on the
perfect.
On the
Even
call.
better. Even better. All right. And then what are the interest rates you offer, and how are they determined?
So interest rates is based on, like everybody else, it's based on experience, right? So on a fix and flip, we're at 10%, we go from 10 to 13%. And on a DSCR loan, we are somewhere in the 7s right now, mid to high 7s. But for the average rate is going to be around 11% or so.
Very good. And last question here, do we need to be Think Realty members to download the app and begin? You do not. You're on this webinar, you've shown interest. That to me says that you want to learn more. So I would download the app, and it's been shared here as well, the link. So guys, I would click on that link and take care of it now if you can. But no, the incentive for us is we enjoy doing these. We want to start driving more people to what we're doing with webinars, but also for somebody like BACKFLIP who has taken time to do this. No, take advantage. Whether you're a Think Realty member or not, take advantage of this. If you want to be a Think Realty member, then you can reach out to me directly, and I'm going to put in the chat, I'm going to put my email address. If you want to become a Think Realty member, very, very simple process of doing that. And it allows you more access to things like this, as well as our magazine events, etc. Let me see here.
Should I put this in the
Are
chat?
renovation funds released when I close on the purchase, or do you work on a draw schedule? Good question.
We work on a draw schedule. Yeah, we work on a reimbursement draw schedule. Now, the thing to know about our draw schedule in comparison to my competitors is we do it all virtually, right? So the traditional process for draws is the member or the borrower will submit for a draw. The lender will then have a third party go out to the property to do an inspection, right? So now you've got to arrange with that third party for them to come and do the inspection. That third party then does a report and sends it back to the lender. The lender then reviews that report, and if they have any questions, now they're following up and so on and so forth. So traditionally, if all goes well, you'll get your draws within a week. If there are any issues, it can take 2 weeks or however long in the traditional sense. Where we're concerned, once you submit for a draw, it goes to the draw manager, and then you arrange a time that you're available to walk through the property with your cell phone. You're going through and you're talking to the actual draw manager that's going to be issuing your funds. So they're able to like look at it and say, okay, then take a picture of that, take a picture of this. Hang on a second, give me some more information on that. Why did you do that? And so on and so forth, right? Once that is done, they are now approving your draw, and then they're issuing your wire. So on average, from the time that you submit for a draw to the time that the funds is in your account, it's 36 hours.
Good stuff, man. Do we have a Think Realty magazine subscription? We do. Email me directly for more information on that. I put my email in the chat, but it is kpower@thinkrealty.com. We can discuss the subscription and the various offerings that we have at Think Realty. Do you review estimates from contractors?
Do we review estimates from what? I think I need more clarity. So do we review it for what? Do we like push back on contractors and on their pricing? I mean, you wouldn't know that.
All requests. The attendee would like to know.
Okay, so ultimately, your scope of work is between you and your contractor. We're looking at it from the perspective of one, the work that you've identified to do. Does that add value to the property, and is it in line with the after repair value and so on and so forth? And if that's the case, then that's fine. The other thing that we look at is, and again, where we differ is other lenders. So you submit for a draw for your kitchen. Let's say that you're putting in a $15,000 kitchen and you submit for a draw. Well, other lenders are going to say, well, show us your invoices and so on and so forth. Okay, then you have invoices of $13,000, so they're only going to issue $13,000. With us, if it looks like a $15,000 kitchen, we're going to issue $15,000. We're not going to nickel and dime you on the $2,000 or whatever it is. Now, let's just say that you say it's a $15,000 kitchen, but when we look at it, it's like Formica countertops and white appliances. Now we have a problem. You know what I mean? Now we're going to ask for invoices and we're going to say, hey, you need to prove this. But once it's in line with what it should be, we're not nickel and diming you.
Perfect. Very good question here, especially in these times where people are wanting access to capital. People are wanting to know where can they find the money. What states do you lend in?
So we lend in every state. The only state that we do not lend in that we want to lend in is California. We don't lend in Arizona, not Arizona, in North and South Dakota, Vermont, and I think it's Utah. But outside of that, we cover all of the states.
Perfect. And no shot at the states that you mentioned, but not really, from my experience in 10 years in the industry, not really investor friendly markets, if you will.
There you go, which is which is why I said that California
Yeah.
is the only one that we don't lend in that we want to be in.
Yeah. If you want a winter home for 10 months, go to South Dakota.
There you go.
So, follow up on the previous question. Do you vet the contractors?
We do not. That's ultimately for you as the investor to do. Now,
Do due diligence, exactly. Part of your due
correct,
diligence process should not just be on the deal itself, but also I always stress to people, the other parties involved in the deal. The deal
correct.
can look like $1 million, $10 million, but if you don't know your people, that's where you can run into some severe issues.
There you go. If you don't have the right team, having the right team is going to be tantamount to your success, and we don't want that liability. Now,
Right.
that being said, the relationship that I have with clients is if I'm looking at a rehab budget, for example, and I just think it's kind of way out of whack, I'm going to say, hey, I feel like this might be a bit high. For like a client just called me, her insurance was $3,000 for a $150,000 property. And I was like, I feel like that might be a little bit high, but again, I'm not an insurance broker, so I can't say that it is.
Right.
But I can say, hey, I feel based on what I'm seeing, I feel like this might be a bit high. You should probably delve into this a little bit more. But I'm never going to say, oh, don't go with that insurance, because again, that's your decision.
Right. And I think that's the thing to stress is that with everybody in the industry, you've got to be the one that does the do the do, because myself, Dave, anybody that we have, I mean, we're not CPAs, we're not attorneys. We can't give you any kind of tax, legal, investment advice. I mean, all we can speak of is, hey, I think the deal's good based on these parameters, but ultimately you have to have done the due diligence. You have to have the risk tolerance that's such that you feel like it's going to be a good investment. It's going to be a good deal for you. And then those pieces all start to come together after that.
100%.
Are monthly payments required while I am renovating the house and prior to the sale?
Yes, yes. So once the loan is issued, you're going to start paying interest payments the following month. So you will be paying interest payments until the loan is paid off.
That's fair enough. Let me see. It says, Dave, I need your company's information, at least the phone number. Yeah, I can post. What's your guys' phone number? I'll throw that in the chat right now.
So my direct number is 240-226-2778.
There you go, everyone. It's in the chat for you. What type of events do you host?
So we do local meetups. We sponsor local meetups, local networking events. We have clients that are wholesalers. We align ourselves with wholesalers, and we do sponsor a bunch of those events as well. Whenever a member comes to us with anything that is community related, we're always we want to. So yes, obviously we're in business to make money, right? But the sense of community is also big for us, right? So if there's any events in your local area that is specific to this industry, is specific to investing in this space and helping people invest in this space, we'll look at pretty much anything and everything that we can, again, just to sponsor, just to do good.
Which makes sense. I mean, when you're lending in essentially every state but 5, definitely would make sense for you to be in those markets and have some kind of a presence as well, for you guys to understand the market as well as the client base as well. So I love that you guys do that and take the time to do it.
100%. That is exactly it.
Do you do virtual meetups in case anybody's not local to those?
We do. We run the full gamut. We have and as a matter of fact, I think Mariah might be on the call, but Mariah runs our community events. We have, on any given month, we have, I don't know, maybe 8 or so our own virtual events that we do, whether it's learning or networking or something along those lines.
Perfect. Last question, guys. Are there discounts for experienced investors?
Absolutely. So like everywhere else, right? So the more experienced you are, the more favorable our terms. So for example, I said that our rates are between 10 and 13%. Obviously, the more experienced person is going to get 10%.
Right. A little less risk on that borrower versus
there
the
you
brand
go.
new. Nothing against the brand new one, but that track record does count in this industry.
There you go. There you go. And for somebody that is doing like real volume, we do even bespoke services as well. So if you're doing volume, a lot of volume, we'll create a bespoke program that suits you.
Awesome. Good stuff, man. We had a lot of great questions. I appreciate all the questions and the interaction. Guys, scan this QR code before we go off. Definitely want to make sure you guys take advantage of that. Dave's number I left in the chat, 240-226-2778. I got to say this, and you know, BACKFLIP works with Think Realty, but I will tell you this, the responsiveness that I have experienced with BACKFLIP is second to none. So I can only attest that if you are a client, potential client, you're going to have a great experience with them. They answer emails quickly. They pick up the phone. Imagine that, the old personal touch. They pick up the phone when you call them. I mean, they're eager to work with you. And as Dave said, yes, their end goal, it's for profit, guys. We all want to make money. We want to make money doing investments. Companies like BACKFLIP want to make money helping people. That's not a bad thing. That's a good thing. And that they're very upfront about that. But I can only tell you from my experience, and Dave, again, we've known each other for a few years. I can't say it enough when you have a personal touch with people who know what the heck they're doing and they do it very well, but then they have that responsiveness. They take you seriously is what I'm trying to say. So I would encourage you, take these guys seriously as well. Scan that QR code, reach out to Dave, reach out to his team to learn more, learn how they can help you, especially in this time of uncertainty, recessionary times, inflationary times. Let these guys help you be successful in any market. That's why real estate will consistently beat the stock market, because you can make money in any market, anywhere, any sector of the world. So with that, everybody, oh, look at that. We have another question.
Okay.
Dave's phone number disappeared from this chat before I had a chance to take a pic of it. Well, let me just say it out loud again. 240-226-2778 is Dave's number. And then you see at the bottom of the QR code, additional questions, email them at start@trybackflip.com. Can't recommend these guys enough. Great people, great business model. Pick up the phone, call them, send Dave an email, give him a call. Look forward to everybody in the future for being on these, but thank you so much, Dave, for being here. Really learned a lot as well. A lot of engagement. Thank you guys very much for being here. We'll talk to you guys soon. Be healthy, be happy, help each other out. We'll talk to you all soon. Thank you.
Thanks, guys. Have a good one.